Hello and welcome back to another video. In today's video I'm going to be sharing with you how I managed to take advantage of this high probability trade on GU as a result of market participants' chosen trading actions. I'm also going to be sharing with you how I managed to actually incorporate the economic calendar to make a higher probable, more informed trading decision. So stick around. Okay, so let's dive into our analysis on the dollar index and actually share with you how I managed to actually incorporate the economic calendar in the first place. Before I actually do so, I'm going to be highlighting, sharing with you how I managed to actually, take advantage of market participants' chosen trading actions in the previous week, and share with you how I actually managed to, take advantage on just identifying what the overall profile of price was on a daily level. Now, from this, manipulation handle to the upside, clearing some of our buy side liquidity, we actually see intent is actually shifted from the upside to the downside, purely down, not down to any of our parameters such as, some of ICT's teachings, etc., whatever you like to use, support and resistance, but down to purely of where market participants actually want price. Now, it's not until, Wednesday we actually see, more likely than not, we are potentially going to see a run for our previous monthly low. As it's simple as, where was the monthly candle actually trading at its time? It was down here. So more likely than not, this is where probability comes into play. We are going to make a run for this level, as it's a lot more probable it's going to make a run for this level because it's simply closer. The likelihood of participants actually pushing price back up, to our monthly high is a lot less likely. So this is where you just have to add basic, probability into your overall trading system. Now let's actually take a closer look at our actual trading week. We can see, okay, what was left behind post this move and intent to the downside as materialized by market participants. For me, it was our daily fair value gap. Now what does this mean from Wednesday onwards in our previous week? It means more likely than not, our next move is going to be some sort of retracement into this gap before, predictability becomes clear next. Now, for me, all I'm actually using this daily fair value gap is probability. Okay, more likely than not, we're going to retrace into it and then potentially look for lower prices, as that, as simply as how our monthly candles actually materialize in live time. Not necessarily looking at, trying to make a home run of, what's going to happen next. Can I catch the biggest expansion? No, just simply look to catch it when it's actually occurring. And hence the fact that I managed to actually take advantage of the trade on Thursday, where, as you can see, the expansion on our weekly candle on our daily time frame. So let's take a closer look at our, week in live time. You can see Monday is actually a range of consolidation. Now this can be more likely than not. As we can see, Monday we've actually got no high impact drivers in some of our, kill zone sessions. Tuesday, very similar, as I'm on the now, I'll review it. We actually only have, some of our presidents speaking later on in the evening at 8:40. Yet again, not in our kill zone. So what does this mean? This means more likely than not, it's going to be some sort of consolidation, actually generating liquidity before we get some of our highest of significance impact folders, such as CPI, such as FOMC, such as NFP. Now, it's just probability what's going to happen next. If you know CPI is going to be on Wednesday, why bother, trying to get in a trade early when the expansion is more likely going to happen post Wednesday, when we've actually had the release of the news and when manipulation is going to be most probable before we actually then see the run of expansion to a given level. In this case, to our previous weekly low and to our previous weekly low. Now, Wednesday, let's actually review our CPI's delivery. See, price actually came from our upside. We had our retracement back into our daily fair value gap parameter, where more likely than not participants were going to be lower. So holding off as we see our range of consolidation, get CPI manipulating to the upside, actually clearing out some of our buy side liquidity. Now, intent actually becomes clear that participants do want to push price lower, simply down to how our 4-hour candle actually closed, in the 4-hour candle where CPI was actually released. see, our wick up, wick doing the damage, and then our body, telling the story. And this can be simply seen as well by our daily close, our bearish daily close post manipulation. Now, this means for me, more likely than not, Thursday is going to be, the run of some of our significant levels because the manipulations actually occurred. The hard work is simply just waiting for this to actually pass and not get too excited from any, little intraday moves that are happening, some of our tracements, etc. So I'm also going to quickly review on our lower time frame, some of the delivery and how market participants actually traded post our manipulation to the upside. So yet again, this is where, our parameters actually, there's more weight to them. There's more probability that they actually are going to get reacted as manipulation takes place, our basic AMD framework. See, our parameters left behind from CPI are some of our inefficiency price levels here. Participants traded up and traded down on our Wednesday. Going into Thursday, we actually see our retracement up. And then as soon as we've had this retracement, this is when we see our displacement to the low here. And this is where you want to be looking to take these high probability trades and actually align it with GU and EU. Now, if it means waiting for this to actually occur, wait. Because, like I said and I've mentioned in other videos, dropping your frequency will up your win rate. Dropping your frequency means that you're only going to be taking advantage of, these higher probability trades. To actually dive into the execution of our trade. So let's start off on our weekly level. We can see in the previous weeks our parameters have actually presented, potential shift in this overall continuation to the downside where we could see some sort of reversal. Now, this is evident purely on the parameters that actually leave itself on our higher time frame. So we can see our weekly fair value gap here. Drop down to the daily. We can see going into Monday, more likely than not, this is going to be a retracement as aligned with the dollar index. And we can see on Wednesday, this is where our manipulation was. More likely than not, this is going to be low of the week as intent is shown higher. And we've got some of our key levels such as previous weekly high, previous monthly high, all, with narrative around this weekly fair value gap. Now for the execution itself, simple as OTE in line with our daily bias, and, a high predictable trading day, making it a high probability trade. The truth is, a lot of the technicals will actually work. You don't really want to be focusing too much on the overall technicals, just make sure you've got a fixed data driven model that's, been historically tested, so you actually fully understand it and know what you're actually trading and what you could potentially expect to return if you were to be trading it, in a mechanical trading way. But then over time, you obviously add discretion, you learn to master it, you learn, which days are going to be better to take advantage of and why. 90% of this is down to our economic calendar, as shown in this video, where our overall, daily expansion is on our weekly candle. So you can see I waited for price to actually come down to our OTE, and as soon as we actually saw intent to push his prices higher, from this 50-minute candle here, this is where I executed with my stop loss just below our OTE pull, just with a little bit of breathing room. As see on Thursday as well, we did actually have some of our new drivers at 130. Now, with saying this, okay, when we've actually already had some of our weekly manipulation, this also means more likely than not that our news drivers following, if you've got the anticipation the high or low of the week is going to be in, our news drivers post this are going to be delivery. It's going to be just increasing the volume and just adding to the weight on participants' chosen trading decisions in a given direction. In this case, to our previous high. So I hope this did clear up a few things, and now I'm simply just going to give my outlook on, how participants are most likely going to trade as a result of how they've actually traded in some of our previous weeks. So We can see, obviously, shown very bearish intent, you know, as mentioned in this video. But now, what are the parameters left behind? We can see our daily fair value gap, very similar again to our previous week. More likely than not, participants are going to trade price back to this to Monday, potentially Tuesday, where we could see some sort of range of consolidation. You can see, you know, our lack of news drivers on Monday, meaning yes, it could be a retracement, but it's going to be no probability. You know, these parameters may not be present themselves in a fashionable way, and you know, you're not going to be taking advantage of the expansion, which is what you want to be taking advantage of, you know, the majority of the time. Tuesday, you can actually see we actually have some drivers on GU, nothing too significant on, you know, USD or the dollar index, and it's not until Wednesday when we start to get some of our significant drivers, such as, you know, FOMC meeting minutes. On Thursday, you can see unemployment claims at 1:30. Now, by this point, the predictability of our weekly candle will be predictable, so more likely than not, unemployment claims will be some sort of driver price instead of manipulation. Friday, very similar. You've got some of our, you know, significant drivers, such as PMI. Although they are lesser significant, they could also, you know, help with adding to the predictability, potentially taking out some sort of internal range liquidity before, you know, actually taking advantage of a predictable session, such as London session or New York. But what I'm actually anticipating from this is to retrace back into the daily fair value gap, some sort of range of consolidation, yet again manipulation to the high, and then this is where we could potentially see our framework lower. And I'm not going to actually rule out that participants could actually look to push price to our low here. For GU, very similar. A draw is going to be higher prices, mirroring what I've said on the dollar index, just obviously not symmetrical. Euro USD, I am anticipating a run to our monthly fair value gap. As you can see, this is our most probable for here, and then we'll obviously assess how participants react in lifetime when we actually meet this. So I will actually go into more depth on my outlook as the week actually goes on, and, you know, predictability becomes a lot clearer. But all I'd recommend is actually just sitting still on our Monday and Tuesday. If, okay, a retracement is predictable and the parameters present themselves fashionable in our kill zones, then a retracement could be very nice to take advantage of back in the daily fair value gap. But like mentioned, I'll obviously assess lifetime. But thank you very much for listening if you have made it this far, and I will keep the Telegram updated on my live trading actions and decisions, and I'll also be adding to my outlook as the week goes on, as mentioned. Thank you very much.